The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Green across the screen, the S&P just about 1% away from record highs. At Studio 2 in headquarters in New York, I'm Alex Steele.
And I'm Scarlett Fu. We're kicking off to the closing bell here in the U.S. Everyone has a little bit of a hangover from the Super Bowl.
I didn't drink, but everyone else seems to have a big-time hangover. Let's get a check on where the markets stand. Maybe this is why we're just kind of melting up with no real catalyst. You're looking at the S&P right around the highs of the session, up 0.7%. But shocker, is tech leading the way. You have the NASDAQ up a full 1 percentage point, and a large part of that is Meta. We're barely eking out a gain, but it's significant because you're looking at 16 straight days of upside for Meta, Scarlett.
Pretty incredible. So the price action today is up arrows all around. Yes, in equities, as Alex just showed us, but also in gold, which is taking aim at $3,000 an ounce, as well as the U.S. dollar, which is firmer against the yen, euro, and pound. Now, within stocks, Alex mentioned tech is leading today's rebound. In the process, it is trimming its 2025 losses to less than 1% as investors look past inflation concerns as well as tariff threats. Now, speaking of which, President Trump's plan to impose a 25% tariffs on all steel and aluminum imports is lifting those underlying metal prices. Aluminum futures at the highest since 2022, while New York copper surges to a 10-month high. Now, even though Trump has not clarified when those tariffs might take effect, analysts, including Isaac Baltansky of BTIG, say the threats are not empty.
We should expect meaningful, sustained action because the president thinks there's an imbalance that needs to be addressed.
As the White House works on trade policy, Congress is preparing for Federal Reserve Chair Jay Powell's testimony the next 2 days. Now, setting the scene for his remarks on monetary policy, the first CPI report under the Trump administration tomorrow at 8:30 a.m. Whatever that report says, companies, including McDonald's, are saying that their low-income diners are still very price sensitive and their spending remains under pressure. In addition, Alex, multinationals like McDonald's have to contend with the stronger dollar, too.
Ooh, good point. Even though the rest of world sales did pretty well, yes, that stronger dollar, we're hearing more and more in that on conference calls. This is just a basic chart check here on volatility and where we're really seeing it. It's not normalized, but it goes back a full year. You got the white line, which is the VIX index, so volatility of stocks. The blue line is the MOVE index, volatility of bonds. And the yellow line is FX volatility. And you just look at the outperformance of the volatility in the FX market just continues to climb. As for equities and bonds, that kind of go and mull around nowhere. But it's that volatility in the currency market, because that's where you really see it reflected through tariffs, is through that currency market. And then how do you trade that and how do you play that? And as you point out, Scarlett, the dollar continuing to be an issue for some companies there on their conference calls.
Absolutely. All right, let's put it all together and kick things off with Aaron Dunn. Aaron is co-head of value equity and portfolio manager with Morgan Stanley Investment Management. Aaron, welcome to The Close.
Thanks for having me.
Where do you find value in this market? You have tech retreating a bit in 2025, but not by that much anymore. And we have the S&P 500 near record highs. And even with all these tariff and inflation concerns, investors continue to kind of push stocks higher.
Yeah, so since last year, we've been talking about the market broadening, and I think you saw that in the back half of last year with financials really taking some leadership in the market. You've actually seen healthcare take some leadership as well recently, so those are two of the top sectors to kick off the year. And that's great to see because the other companies, the other sectors are participating. So what we really see these days is the volatility of the market's been up, and we expected that late last year and really adjusted our portfolios accordingly. But as we see, the daily news flow is quite frequent, and it impacts a lot of companies individually versus the broader market. So when we look at, we're really a bottom of stock pickers from our team's perspective. When we look at that, we're looking for stocks where there's really been a dislocation regarding a tariff announcement or something where we think there's a lot of opportunity.
That's dangerous, though, to wade into that area because an announcement can come, a clarification could come just as quickly, and it's being negotiated out in the open. Correct.
We look at a really long-term focus here, right? So we really think about what is a short-term dislocation? What does this mean for the industry over the long term or the company specifically? So that really is how we view sort of value within that context.
So how do you then, within value, where's the opportunity? And I was trying to find a chart for you that was like growth versus value and the outperformance and what was going on. But if I really looked at it, they're both still tech. Like the largest weighting in both of the indexes is still Apple and like Microsoft. So what is value to you?
Correct. Different companies. We look at it on an intrinsic value basis. So we're not looking at a TAM, right? That's what's going on with AI today is what is the total addressable market? To us, that's a growth strategy, right? That's the valuation for growth and why the valuations look so high is what that TAM looks like. We look at intrinsic value and where do companies really look on a valuation perspective to what we think they're really worth. And so, and where do we think that's undervalued? And we look at opportunistic value is really how we talk about that, but is where does the dislocation in the market allow us to pick up an equity on a company we think that's really undervalued? That's how we define value. And so when we look at creating a portfolio of different names, it is kind of around that center for us.
Give us a top pick.
So we really like financials and healthcare. So we really balance things out. So Thermo today, Thermo Fisher Scientific TMO is down 3 or 4% on this NIH indirect funding cap that the administration put into place. To us, that's a company that's really grown earnings in the mid-single digit for a couple of years post-COVID. We think that they're set to continue to do that. They got some operating margin improvement. Then stock's really gone nowhere. So really, it's derated over the last couple of years despite growing earnings. Excellent company, excellent diversification of end markets. And when we see the AGs that sued the Trump administration over this funding cap, we think there's a lot of opportunity there longer term.
What about within sectors? How far down do you want to go in market cap size? Because obviously you can look at the S&P 500, you can look at the Russell, which has underperformed the S&P by about 50 percentage points since the last 12 months.
Yes. So really going down cap has not paid off, right? The mega caps is what's worked in the market. And really to start the year, we actually did see the lower capitalization sort of indices do a lot better. And really that relates to expectations around interest rates because small and medium businesses tend to borrow on a floating rate basis. So the interest expense is a bigger impact to them. And so that was a real struggle last year. Going into this year, there was an expectation of rates might come down. And I think that helps small and medium business. And also really when you look at the enthusiasm among small and medium business around a new administration, the confidence for these companies is expected to be a lot better. And so you've seen that in some of the numbers. So, going smaller cap, going mid cap, I think there's some opportunity there. The mega caps are the ones that we think are more fairly valued, to be quite honest.
Yeah.
Yeah.
Are you hearing that confidence when company executives speak on the conference call? Because they are all prepared. They're all keeping the bar very low.
They are, exactly right. So you've had two things, and you mentioned foreign exchange previously, right? So the strong dollar, I think they're baking in worst case scenario. Yeah. So you're getting a lot of what are actually good reports that are overcast by the FX being too high or too low for expectations, too volatile. And I think there's not a lot of confidence. Right? There's not a lot of confidence around big business. And so without that, they're less willing to step out and make a better guide than that they should. So we do think that that's really clouded the earnings season. The market continues to push higher, but really underneath it, to me, the earnings haven't been fantastic, right? They've been okay. And even the mega cap tech, their CapEx numbers, really, people are starting to question those. So,
right, 70 billion here, 80 billion there.
Yeah, exactly. It's just we're throwing out entire companies every year. So that really worries us in terms of the market's perception continues, I think, to view the economy is doing really well, and I'm not sure that it's doing as well as people want to think.
Before we let you go, one of the other stocks that you like in the energy infrastructure space is Baker Hughes. But speaking of, that stock has been on a tear. Expectations were super high going into earnings, and they even over-delivered. So what's the value proposition there?
Correct. So Baker Hughes is a company that had a traditional energy business, and they merged with GE Oil and Gas, and that gave them an industrial energy technology business. So they make compressors, they make turbines, and they had some operational challenges for a couple of years in terms of post-COVID sort of supply chain. That seems to be really cleared up, and that's fantastic. So what they have is this growing backlog in the industrial business that we think the margins embedded in that are much higher than where we are today. So we think there's a lot of momentum there that you can continue to do that. In our view, traditional oil and gas is probably a little more challenged here from the sense of, I believe the Trump administration believes that oil is a big deflationary benefit, meaning if we can get oil prices down, those inflation numbers start to come down. So there may be policy, whether it be geopolitics around the globe or where else, that we're driving. He's looking to get oil lower. So, but the one thing we do believe in is infrastructure in the United States is going to go in, right? So he believes in making the U.S. a big energy powerhouse, and Baker Hughes plays right into that. And that goes with the data center, AI plays of utilities and behind the meter infrastructure for compressors and or for turbines. So there's a lot there, right, that they're playing in the trends of.
It sounds like it's in the center of a lot of those trends.
It is.
All right, Aaron, thank you so much for joining us.
Thank you.
Aaron Dunn is co-head of Value Equity and Portfolio Manager with Morgan Stanley Investment Management. A lot coming up on the close. Coming up, shares of onsemi sinking about 7.5%. after the semiconductor device company gave a paltry 2025 outlook that missed estimates. Why one sector in particular has the CEO calling 2025 uncertain.
Plus, we continue our conversation about tariffs and turn to China as its retaliatory efforts take effect today. A discussion about how better prepared the country is for a trade war and what that means for the U.S.
And President Trump's trade efforts not keeping him from last night's big game. We break down the media mayhem at the 2025 Super Bowl with Mark Douglas, founder and CEO of Mountain. All that and more coming up. This is The Close on Bloomberg.
Well, it's Merger Monday, kinda, I guess. It's also a bit of Activist Monday. Lots of news happening in this arena. So first off, you got BP getting a boost after activist investor Elliott is growing their stake in the energy giant as they push to look for significant changes. You have Hyatt Hotels making an offer for Playa. You have TD Bank wanting to wind down their stake in Charles Schwab. There's a lot going on. So more on this. We are joined by Bloomberg's Crystal C joining us. Let's start with BP because, it's energy and I want to. So BP has been struggling for the last 5 years. Part of that is situational in terms of the natural gas situation with the Ukraine war, and part of that is just their strategy was bad and their supply chain issues were rough. What does Elliott want from BP right now?
So that part is unclear for now. So our team actually worked overtime over the weekend to break the news that Elliott is in the stock. I think what's interesting is that whenever Elliott shows up in any stock, the stock pops almost immediately. So even though we don't know exactly what Elliott is pushing for, we know that they're pushing for some, they want change. And one of the most popular activist thesis is, like you said, like whether a company is underperforming its peers. So if you compare that to their European peers, US peers, it's a very easy argument to make that BP needs some change. So that remains to be seen what Elliott wants. We don't know how much they own just yet. We don't know exactly what they're pushing for, whether it could be board change, the company for sale, to separation. We don't know, but those are all popular activist theses.
And I don't want to call the strategy bad. That was my bad. But in terms of the stock reaction, the investors have not liked the direction of the company over the last 5 years, as oil and gas companies that are more pure plays are doing really well and they're making a lot on their production, and BP was transitioning towards renewables, which, as we know, the return profile there can be real tough.
Absolutely. So I guess the question is, do we assume that this will turn into a negative campaign, or could this be resolved amicably?
So it could go either way. Elliott is not known for picking a big fight. The last time they did a fight was in 2017. So what Elliott tends to do is that they come in, they tell the company that these are the things you should do, these are the things that we can, you can improve on, present ideas, most likely because...
So they speak softly and carry a big stick.
Well, I don't know how softly they speak behind the scene, but their presence speaks volume, and them showing up with a stake, usually a big stake, usually means that management needs to listen to them. But more often than not, they settle with the company rather than picking a big proxy fight and making it a big spectacle.
Okay. So things get resolved. Yeah.
Also, I was talking to BI analysts, and they were saying things like, the board could be at stake here, right? Like the board was there back in 2020 when the strategy was rolled out. So it's not like this was new. Maybe even a listing here in the U.S. Shell has also been flirting with that as well, that could be a big one. Maybe spinning off their transitional business. Like there could be some material changes here, potentially, that's according to some analysts. What else are you guys working on right now? There's a ton happening.
Yeah. So January was busy, but it wasn't the busiest January we've seen, and coming off the back of the Trump, win in the White House, a lot of M&A advisors were actually expecting a huge boom, which we haven't really seen, but it was still active. We see that big Calpine Constellation deal, which our team also broke, as a $30 billion another energy renewables deal, power deal. But there are some stuff floating around. Like just now, there is Merck has confirmed that they're in talks with Springworks, so that's something in healthcare, and the TD Schwab thing was probably a long time in coming, where TD was in in a strategic review, and now they're finally unwinding their stake in Schwab.
I hadn't even realized that they owned a stake in Schwab.
Yeah, so they got the stake when they sold Ameritrade to Schwab, so it's a legacy asset. And when you look at what you own and what you can liquidate like as soon as possible when you're trying to recoup some cash, it would be a public stake.
All right, Crystal, always appreciate your joining us. Crystal C covers M&A and activist investing here at Bloomberg. Coming up on the close, shares of ON Semiconductor falling today about 7.5% after its outlook for this quarter failed to impress Wall Street. We're going to have the recap of those results next in Top Calls.
All right, taking a look here on the commodity prices. This is really a good gut check into what we're seeing in steel and aluminum after the tariffs were put on by the Trump administration. You're looking at aluminum prices here at its highest level since, I think we're looking at like the last few months. Also, hot rolled steel index, the highest since April of 2024.
A lot of green arrows.
A lot of green, and we're seeing gold at a record too, because that's protection. But here's the thing, when you're looking at commodities, it's an efficient market. So the prices will re-rate and then different things will happen. So maybe you'll have ore on the other side of the world be cheaper than it is here, or maybe you'll have some imports being backed out if you can actually produce at home as well. So it's an efficient market, which is why you're going to see prices jump around a lot.
All right, well, we'll continue to keep an eye on these developments. Remember, for now, the headline is that he's thinking of imposing these tariffs, but no word on when.
No word on when, but wouldn't be a surprise because he did this in his last term either. So there you go. This is Bloomberg.
Time now for our top calls, a look at some of the big movers on the back of analyst recommendations. And let's start with biotech company Illumina, a downgrade to underweight from equal weight over at Barclays. The analyst cites uncertainty in China as well as increased competition from rival pharma company Roche. He raises questions about management's ability to deliver and says he expects the shares to struggle for the rest of the year. The stock currently down about 6%.
All right, Scarlett, I'm taking a look at Shopify, the Canadian e-commerce company, getting a buy rating from Benchmark ahead of tomorrow's fourth quarter earnings release. The analyst anticipates comfortable upside and expects Shopify to introduce new marketing tools using generative AI and other creative programs, setting a price target here of $150 a share, and the stock is up almost 2%.
Alex, we're also looking at shares of NVIDIA ahead of its fourth quarter earnings due out in 2 weeks' time. Evercore ISI adding the AI behemoth to its tactical outperform list. That's despite concerns from China's DeepSeek. The analyst says NVIDIA, quote, remains the platform of choice for hyperscalers, and it remains 5 to 10 years ahead of anything else in the market. Shares up about 3 2/3%. And those are some of our top calls. Let's stay with the semiconductor companies and earnings, because this time we're watching shares of ON Semi, and they are tumbling after the outlook for the current quarter failed to meet analyst estimates. Joining us now with more on this is Jed Dorsheimer. He is head of energy and sustainability over at William Blair. He has a market perform rating on the shares. Jed, what can we attribute this disappointing forecast to?
Yeah, I think it's the magnitude of the decline in auto for the outlook has clients questioning, is there something more than cyclicality? Is there something structural going on? And I think that's why you're seeing the sell-off today.
What areas are the weakest? Right? Is there any indication that any of the areas have already bottomed and can pick up?
Well, China EVs are really what's hitting on today. So, and ON Semi is a power semiconductor company. Took a strategy of, successfully selling into the Chinese market, and Chinese New Year is really hitting them right now, combined with just an overall slowing of EVs. And this takes the form of both silicon, but also silicon carbide, which is a compound semiconductor that has a lot of promise in EVs as well as energy. And so that's where you're seeing the slowing. They have some positives in terms of data centers, but it's not enough. It's really at the infancy and not enough to offset the slowing in these other areas.
And is there any sense of how long this slowdown in EVs will last? I mean, I know this is a much bigger question than something for ON Semi, but it's a big question mark overall because the supply chain is pretty long.
Yeah, I mean, your previous guest, I think you were talking about tariffs and impact on steel and aluminum. That's going to make a lot of the cars, most of the EVs are aluminum, which is going to make them more expensive, which is going to be a challenge. particularly in the U.S. an administration that's not too keen on subsidizing EVs. So I think there's more pain to be had in the EV market, and some companies like Tesla, are seeing some relative immunity, largely because investors are focused on the non-auto in terms of autonomy and energy side of things there. So if you're an EV only, there seems like there's some more pain coming.
So what about their industrial application unit for onsemi?
Industrial is, it's certainly faring better than that of auto and their other category. However, it's really tied to PMI indexes, and so what you're seeing is, across the board globally, less than 50, which means that you're seeing contraction in terms of manufacturing, not expansion. Now, if that shifts, you would see that have some relative performance for on.
You've noted, at least before the earnings call, that one of the questions you had for management is if the recovery in some of their end markets isn't L-shaped anymore, what exactly is it, or what would it look like? Did you get any sense of that answer from the earnings call?
I think it's a prolonged L. I mean, you're always looking, is it a U? Is it a V? What does that look like? And right now, unfortunately, visibility is just lacking. Now, I will give management credit. They are, doing a good job controlling what they can actually control. So they're looking at trying to wind down non-core products and walk away from that lower margin as a way to use this opportunity to improve the efficiency of the business, which are things that you should be doing when visibility is waning. But right now, that is, I'd say it's a good house on a bad block right now.
Good house, bad block, stock still getting punished, lowest level since July of 2022. Where do you feel comfortable a bottom being right now?
If it is just cyclical, these are going to be areas that people are going to start looking to nibble at. We're still holding with our market perform, so we haven't made any ratings change yet. We're trying to assess to make sure that there's not, something in the closet that we're not seeing. But if it's just a matter of timing and cyclicality and when you expect that recovery, you're probably getting to levels that approach a bottom.
All right, Jed, thanks a lot. We really appreciate it. Jed Dorsheimer over at William Blair, looking at onsemi off by about 7% after earnings were a little disappointing there. It's not taking a lot, Scarlett, for stocks to get punished if there's any kind of miss. It should be stated. Individual volatility feels very elevated.
Especially if you're in certain sectors, too. Mm-hmm. I know that semiconductor is pretty big and broad, and NVIDIA is not the same as onsemi, but certainly within tech, the bar is pretty high. You were talking earlier about Meta gaining for a 16th straight day. There's some headlines out about how it plans to begin notifying staff of job cuts this week. And this is as it's going to undergo this process that will terminate thousands of people that it decides as low performers because it's trying to it wants to hire people for the AI race.
Right. They need to free up some of that money. That stock up 0.2%, 16 straight days. All right, coming up, more insight on the tariff tit for tat between the U.S. and China. We're going to speak to Zongyuan Zoe Luk of the Council of Foreign Relations next. This is The Close on Bloomberg.
It's just about 3:30 p.m. in New York. This is the countdown to the close. I'm Scarlett Fu.
And I'm Alex Steele. So some of the movers in the market today are steel stocks. No surprise. You take a look at the S&P.
You wanted to say that. Alex Steele, steel stocks.
I did it for Finley. I did it for you, Finn. You're taking a look at the 7th best performing stock in the S&P is Nucor. The 10th is Steel Dynamics, and all the rest of them also are increasing as well. This is as President Trump is planning to impose 25% tariffs on all imports of steel and aluminum, which would obviously make what you produce here in the U.S. much more expensive, which means more profits for the steel makers. Yeah, so protectionist policy would be beneficial to these companies. These are the ETFs tracking steel companies. And you could see the first and the third one, SLX and XME, gaining at least 3%. The middle one there, IYM, only up by 1.1% because steel and iron companies only make about 11% of that ETF. So nice. Less representation there. Good context. All right, let's get more now with Joe Deaux with Bloomberg News, who covers this industry. Joe, for those that you talk to, do you think this is coming down?
That's the right question. I talked to a couple of traders today who said we're still kind of waiting and seeing, because if you actually looked at the action in the aluminum market today, it was pretty calm. So I think people got tripped up last week when they expected Canada, Mexico to come in. People went long, people went short, and then everybody got blown up. So I think there is a bit of a wait and see. I mean, what we're looking at maybe 5:30 now that the president might come out and make some sort of announcement. It's unclear. But on some level, I do think people expect tariffs to come in some form or another. Obviously, the steelmaker stocks are moving in the direction that they think there are actual across the board 25% tariffs coming on.
Okay, and the thing is, we don't know the timing because President Trump didn't give any indication of timing.
Right.
So that remains an open question. And I guess now we know what he discussed with the U.S. Steel CEO when they had a visit last week. Remind us what happened in the first Trump administration when there was also tariffs on steel imports, right?
Right. So that was the big one where Trump came in, got elected, and the first words out of his mouth were, we're going to do tariffs on steel and aluminum and China, right? And like steel and aluminum were kind of like the hallmark of his trade war, if you will. He put 25% across the board tariffs on all steel imports. And then what happened, that was March of 2018. And then what happened over the next year was he started doing these bilateral negotiations with different countries and regions in the terms of EU and saying, okay, we'll exempt you from these if you do X, Y, Z. So now we're here this time around, right? He's saying 25% right out of the gate. And I think the questions are, will he do a similar thing? Will he start to do these bilateral negotiations to kind of bring things back from that 25% level?
For me, I'm interested sort of what the flows do, maybe what traders are looking at here, because as I've been saying all day, commodities are sufficient markets and very efficient. So if something's too expensive, you're just not going to buy it. You're going to wait for the price to come down. If something's too expensive, like there's a tariff now, that price that you might be paying from Canada is going to come down enough to make up for the tariffs.
Yeah, I think a good example of what are the flows telling us today is I was talking to some traders who were saying, well, you know, if you're looking at the futures of U.S. Midwest Premium, which is basically the logistics charge to get aluminum off the LME into the middle of the United States, it's trading at about 30 cents per pound. There are a number of people in the market who are saying that the actual premium should be somewhere near 50 cents per pound. So the fact that you kind of have that discrepancy shows that right now the market is still kind of waiting to get the details. I mean, a number of people are saying, well, what are the actual product numbers that are being tariffed here? And we've had to say, nobody knows, right? Trump made this comment on Air Force One yesterday to Josh Wingrove, our White House reporter, and he kind of pressed him on, well, what are the numbers? And it was just kind of 25% on steel, 25% on aluminum. And that was it. That was the detail.
All right. So lots of room to negotiate, I guess, is the takeaway here. Joe Deaux, thank you as always. Bloomberg's Joe Deaux covers the materials industry, the steel companies, and we appreciate him joining us. Now, for the latest on tariffs between U.S. and China overall, let's bring in Zongyuan Zoe Liu. She is a senior fellow for China Studies at the Council on Foreign Relations. Zoe, thank you for joining us. And let me ask by posing a dumb question. To what extent are these tariffs on aluminum and steel imports, 25%, no timing indicated, targeted at China in any way? Are they?
Charlotte, first of all, thank you so much for having me. It's always good to see you. I would have to say, no, actually, this is not in any way targeting specifically to China, because if we look at the numbers, U.S. primary aluminum and steel supporters are coming from suppliers are from Canada and Mexico. And on top of that, as of last November, the Chinese government actually introduced two different sets of regulations. One is to eliminate subsidies or export rebates for aluminum, and then the other one is to reduce export rebate. So from that perspective, the Chinese government already made moves before tariff.
Zoe, so to that point, do we know how China will respond to any tariff threat? Is it by tech companies? Is it with moderate retaliation? How would you describe what we've heard so far?
Alec, I think the Chinese government has been spending at least the past year to prepare for the worst case scenarios. And broadly speaking, I think the Chinese government can retaliate by imposing tariffs, using non-tariff measures such as imposing inspection and quarantine restrictions, or, to your point, using anti-monopoly measures or investigations targeting at the tech companies. And then I guess another set of tools that the Chinese government can use would be export controls. And on export controls, I think the strategy would probably focusing on three broad perspectives. The first one is to focus on areas that have a direct impact on Republican states. And then the second would be focused using asymmetric measures that the U.S. is more dependent on China and that China would have been achieved higher degree of self-sufficiency. And lastly, the Chinese government could also focus on specific goods that can target or hurt U.S. supply chains. And this is where critical materials or strategic metals could come into play.
Now, one thing that China has done is also take aim at big tech companies, the U.S. big tech companies. It's already said it's investigating NVIDIA and Google over alleged antitrust issues that could also disrupt the Synopsys acquisition as well, Broadcom and Synopsys. Why go after these companies and not Apple or Tesla, which have a lot more riding on the China market?
That's an interesting question. Part of the reason, especially in terms of Tesla, as of last year, Tesla was allowed to be or accepted as a part of the broad government procurement program. So from that perspective, I do think for companies that already have large market exposure to China, they would have more to lose. Whereas for companies like NVIDIA and others, they are already being at the focal point of U.S. export controls to China. So from that point of view, perhaps Tesla they might be thinking that Tesla could be some bigger card that they can play later.
Right. No, fair enough. But which raises the question: what would be a serious response from China? Like, what do they understand the ask to be? And if they wanted to make a clear statement to President Trump, what would that be?
To be honest, I'm not exactly sure the Chinese government, or for that matter, China's whoever the chief negotiator is going to be. I'm not exactly sure they have a clear understanding, because a lot of the decisions are ultimately going to be determined by to what extent President Xi Jinping feel comfortable. And at this point of view, at this moment, perhaps top leadership level communications would be much more critical and more effective than any working level communications, or for that matter, negotiation. Without a clear signal from the top, we couldn't be sure.
Yeah, fair enough, fair enough. So, Zoe, one thing, of course, that's been really fascinating is a lot of people expected President Trump to target China first, but instead, he really took aim at Mexico and Canada. And one of his big issues is border security, specifically the flow of illegal drugs into the U.S., fentanyl. He's also cited China and its role in the fentanyl crisis as well. What role does China play in the fentanyl crisis from where you sit?
From my research, as well as U.S. The DEA or State Department, the annual drug threat review, at least up until now, China is no longer the primary source of fentanyl, the product sold on American street. Yet Chinese small chemical manufacturers, they are the source of underground clandestine labs in Mexico and other Latin American countries. From that perspective, Chinese manufacturers are part of the supply chain. But, in terms of direct supply, China does not export fentanyl to the U.S.
Thank you, Zoe. Really appreciate it. Zongyuan, Zoe Liu on the Council of Foreign Relations. Thank you. Now, coming up, we're watching shares of McDonald's. They are in action, moving down right now after I correct myself, moving up by 5% after comparable sales for the fourth quarter beat analyst estimates, but they did give a warning that raises a lot of concerns about the economy. It's today's Stock of the Hour. Next. We've got some breaking news. An Elon Musk-led group is making a bid for control of OpenAI, $97.4 billion, according to the Wall Street Journal. They want to buy control of OpenAI, so that really ups the stakes here in the Elon Musk versus Sam Altman battle over the company behind ChatGPT.
Amazing. Musk saying in a statement, it's time for OpenAI to return to the open source, safety-focused force for good it once was. We will continue to follow these headlines as they cross. All right, one stock we're watching are shares of McDonald's. That stock is up over 5%. Fourth quarter growth, particularly in the international business, did pretty well, making up for a decline in the U.S. Here to discuss is Bloomberg's Bailey Lipschultz. So, Bailey, if we dig beneath a little bit, the U.S. consumer has some cracks.
Yeah,
at McDonald's.
It's weak, and it's a market that you would think consumers downshifting, down spending would be flocking to McDonald's. They're pushing even more increasingly cheaper meals for kids, cheaper meals for adults, but it doesn't seem to be working out for the company, especially as you mentioned in the U.S. comp sales down 1.4%. Estimates were only for down 0.4%, so that's a big drop off, but they are seeing growth not only in their international operated markets, but also in some of those licensed markets. So you're seeing licensed market comp sales up more than 4%. Estimates were for a decline. So as you can see, overall comp sales moving in the right direction, but you mentioned it, Alex, to the downside. U.S. not too strong.
Not too strong, and they are trying to make some changes, right? There are some new products in the pipeline.
Yeah, they're rolling out, bringing back the snack wrap, pushing into some chicken fries, so kind of a bit of a copycat of what worked for Burger King to an extent. But when you look at the kind of shift towards healthier meals that we've seen with the rise of Ozempic, with people shifting towards maybe more protein-centered meals. Chicken also tends to be cheaper in terms of the cost in the supply chain, so that could be part of the strategy for McDonald's overall.
Should point out Pierre de Soleil over at BTIG as a neutral rating on the stock says, even so, converting the lower income guests in McDonald's from the big discounts that are on offer right now to say higher priced or full price menu is going to be really hard, and it's hard to get constructive on that stock until that happens.
Once you offer a bargain, people will only want that. They're not going to come anymore once you take away that bargain.
90% off on close, I'm there for it. Anything less than that, I ain't buying, and then that affects everyone's bottom line. Yeah, all right, Bailey, thanks a lot. Bailey Lipschultz joining us from Bloomberg. All right, coming up, we're about 15 minutes away from the closing bell right here in the U.S. Callie Cox, Chief Market Strategist with Ritzholtz Wealth Management, will be joining us next. This is The Close on Bloomberg.
We just want to recap the breaking news we told you about a little bit earlier on. An Elon Musk-led group is making a $97.4 billion bid for control of OpenAI. This is, again, the nonprofit that controls OpenAI. And it goes back to that idea, Alex, that Sam Altman and Elon Musk, they don't get along. And they used to work together in OpenAI, right? I mean, they have a history together. They co-founded OpenAI in 2015 as a charity. But then Elon Musk left the company. Altman became chief executive. OpenAI created a for-profit subsidiary, which was raising money from Microsoft, and that's the partnership and other investors. And now Altman's in the process of turning that unit back into a traditional for-profit company and spinning out the nonprofit. Lots of spin-outs.
There was a lot of spinning there. The bid is apparently, and this is according to the Journal, being backed by Musk's own artificial intelligence company, XAI, that could merge with OpenAI following a deal, even though it's much, 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 much smaller. He also has said that he has several investors backing him, like Valliere Equity Partners, Baring Capital, Atreides Management, VY Capital, I can go on, and even Ari Emanuel, CEO of Hollywood company Endeavor, is also backing the offer through his investment fund.
But, they've already had a couple of these disputes, right? Because Elon Musk has filed a couple of legal complaints, basically accusing OpenAI of betraying its original nonprofit mission by creating a for-profit arm. And then, of course, when the Stargate announcement came out between OpenAI, SoftBank, as well as Oracle, Elon Musk then jumped in there and said, where's the funding going to come from? So this feels like another chapter in that long-running dispute.
So is OpenAI for sale? Or does it not matter? Or is everything for sale but for the right price? I guess, is that the better question?
I don't think it matters because a bid is going to be coming, apparently, according to the Wall Street Journal.
Fair enough. I wonder what Microsoft would also have to say to it. Apparently, Musk's investor group is prepared to match or exceed any bids higher than their own. But
as Bailey Lipschultz was reminding us, the OpenAI valuation is a lot higher than what it sounds like Elon Musk is offering here. $97.4 billion to buy control of OpenAI. But I think in the last round of funding, it was something like $200 billion.
Yeah, it said OpenAI was separately in talks to raise about $40 billion in a new funding round that would value the company as high as $300 billion. So potentially even more than that. Anyway, we will follow all of these headlines for you. Of course, that Wall Street Journal report that Elon Musk-led group is making a $97.4 billion bid for control of OpenAI. And as we head to the close, Scarlett, just a quick check-in here on the markets. We're taking a look at the S&P up by about 0.6%, really holding steady. But again, it's still that tech outperformance that we are seeing throughout the equity market.
Yeah, and that's a bit of a change from what we've seen in recent days and recent weeks. For more market analysis, we want to welcome now Callie Cox, Chief Market Strategist with Ritzholtz Wealth Management. And Callie, you've been looking as well at the weakness that we've seen in tech stocks so far this year. I think for the S&P 500, tech is the worst performer this year. It might still be in the red, but just barely, now down 0.7% for 2025. Have we reach any kind of understanding on what valuations look like, or it's still very much in flux?
Look like they're quite high, especially for big tech right now. The concern, at least with investors, and we've seen this through earnings season over and over again, the concern is that those valuations are looking to be a little less justified because a lot of these big tech companies, and I speak about big tech because, like, let's be honest here, the Magnificent Seven is driving the market, and that's a good chunk of the tech sector we're talking about. But a lot of these big tech companies are looking to spend a lot of money on AI, which is great. But from a valuation point of view, you want to see profits and revenues back that up, and we may not see that for another, several years. So we've got a lot of spending now, the promise of growth in the future, and investors just, are wanting something a little bit sooner.
Well, Callie, we have seen, though, buy the dip is still the thing. Last week and the week before, it was the retail traders getting in on those 2 to 3% dips. Then Goldman Sachs says that hedge fund managers were buying last week. So it feels like there is support for the market. And then you add on corporates, and it's going to be hard to see a real meaningful decline, no?
I think there is support for the market here. And, I'm of two minds here. So obviously tech has driven market growth over the past 2 years. And if you look over history, the most stunning, the best performance years that we've seen in the S&P have come on the back of tech leading the market. But that doesn't mean that the other side of the market doesn't exist. And right now the economy looks okay. And if you consider the fact that a lot of big pullbacks come with economic crises and inflation crises like we saw in 2022, then we have a good foundation for the market. It's just not the type of foundation that provides tech the opportunity to lead or provides investors the opportunity to see another 20% year.
How are you thinking through what we hear from Jay Powell this week when it comes to tariffs? I mean, he's working with the same amount of information as we are, which is that the Trump administration announces something, but there are no details like timing, and then they could just as easily turn around and take it back.
Yeah, well, I don't envy Jay Powell here. I'll just put that out there to start off with. He has a very hard job. And honestly, I think he's handled the tariff topic well in public comments. The Fed did do some work around tariffs in a trade war back in 2018 and 2019. They documented it in the Teal books, which is a document that Fed policymakers put together to basically consider alternative scenarios to the economy. The interesting thing there is that was before the inflation crisis. So obviously the thought about inflation is a little bit different these days, but Jay constantly tells us to look back at the Teal books, and the Teal books tell us that trade wars are ultimately more of a drag on growth than prices. So I think what you can take from that is that, first of all, Jay probably won't say much about tariffs in his testimony later this week, but also as the Fed is thinking through it, it's seeing both sides of the risks. And inflation is a bigger risk here, but the Fed isn't blind to the fact that it could drag on growth and business prospects.
I like how you're just calling him Jay. You're like, yeah, you're just going to hang out with Jay. I respect that.
I feel like we're best friends.
Sure. So Callie, what's a good safety trade then right now for you?
Well, the classic safety trade, of course, is defensive stocks. I think it's smart to still look at long-term bonds here, especially if you're worried about the economy. I see the most value right now in cheap cyclical trades. Financials have done quite well year to date. I think industrials look interesting here as well. Just look at valuations, understand that, paying attention to the stocks that trade a little bit closer to their earnings might be the prudent thing if you're worried about expectations and the froth we're seeing in other areas of the market. But don't give up on this bull market. I think that there's still a lot of juice here.
Nope. Yep. You and lots of other people are saying relatively the same thing. Don't give up yet. Callie Cox, Chief Market Strategist with Ritzholtz Wealth Management. And I feel like we keep hearing that, Scarlett, that it's not that you have to sell the Mag 7 and buy something else. You can hang on to them and also buy something else.
And wait for a catalyst. Wait for news to actually hit the market, actual news, as opposed to pronouncements that something could happen at some unspecified time.
Yeah. And taking a look at where we are in the markets, Meta now up 0.4%. Scarlett, this will mark 16 straight days that Meta has been higher. It is currently at a record high. We're also doing really well in the broader S&P. We're about 1% away from the all-time record that we hit. We made up all of those losses since that DeepSeek Monday.
Pretty remarkable. That was only just 2 weeks ago.
So much can happen within 2 weeks. All right, we're moving closer to the closing bell. Full market coverage right here on Bloomberg Television.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
All right, we're about 2 minutes away from the end of the trading day. Alex Steele and Scarlett Fu. We're going to take you through the closing bell in a global simulcast. We're now joined by Carol Masser and Tim Stanovic, bringing together our Bloomberg television, radio, and YouTube audiences worldwide to parse through the most crucial moments of the trading day. And guys, Elon Musk is making it exciting to the end.
Oh my God, it's pretty wild, right? We know the feud that he's had certainly with Sam Altman over OpenAI, but looking to see if whether or not, he could ultimately, with a group, this is our most read story on the Bloomberg in the past hour, making a $97.4 billion bid for control of OpenAI. This is a Wall Street Journal story, but man, it makes it interesting.
I do wonder, what does this mean about a company like XAI? This is his OpenAI competitor, XAI. What does it say about XAI if he wants OpenAI as well?
That he just wants more?
Yeah, as Alex reminded us, XAI is smaller than OpenAI too.
If XAI were better, would he still want OpenAI?
Maybe. I mean, the other question here is OpenAI even for sale, or does that not matter?
I asked that question rhetorically earlier, too.
I don't think it matters. Because
but to be fair, isn't everything for sale but for the right price? And that's what any CEO is probably going to tell you.
Either, but
we don't know. Maybe the right price. I'm just saying. I guess it just also raises the question, too, on the funding for it. Do you guys see that? Like a list of investment firms that would be engaged with this?
Not to mention banks that, have made back a lot of their money on the debt that they took on when Elon Musk bought Twitter.
How does Microsoft feel about the investment, too, right? That they made in the company. I don't know. There's a lot of moving parts.
There's a lot of moving parts.
A lot of unanswerable questions.
Exactly. Yeah. All right, there is the closing bell on this Monday. The S&P is ending up by about 0.7%, almost retracing all those losses, guys, from that DeepSeek Monday, almost by about 5 points. The Nasdaq outperforming up by a full 1 percentage point. The Dow Jones, guys, up by about 0.4%, but the Russell participating as well. But this is still a tech-led rally.
Yeah, it certainly is. I'm going to go, though, to the S&P 500, kind of almost an even split, 287 names, Scarlett, to the upside, 214 to the downside.
All right, let's take a look at the IMAP, and you'll see a lot of green on that screen there. There are two groups that did decline. Financials, which, of course, have done very well this year, seen as beneficiaries of tariffs, of deregulation, of light touch regulatory regime as well. They're down 0.8%. The other slice of red is healthcare, marginally lower. But your best performers are energy, up by 2.2%, tech gaining 1.5%, reducing some of their losses for this year, and utilities also up by more than 1%.
Man, a lot of green on that screen in that IMAP. Let's get to some of the individual gainers. You mentioned big tech and Meta platforms. I won't start there. Well, I am going to start there because it plays off of what you just said, Scarlett. But it was up about 0.4%. I bring it up because 16 days of gains, outpacing the longest winning streak by Tesla. We also did see it hit a record in today's session. Stocks up some 17% in those 16 days. So it's just been on quite a tear, quite a run in terms of Meta. So forgive me, I'm going out of order. Let me go back to Cleveland Cliffs.
There you go.
Let me bring it up. Obviously, the mining space, big outperformance in today's session coming off of tariffs. Steel and aluminum stocks surging on the president's plan to impose 25% 25% tariffs on foreign imports in the sector. I just pulled out one, Cleveland-Cliffs, which finished just off its highs of the session, but still almost an 18% gain. Nucor, Alcoa, U.S. Steel, all of them. The thinking is that these tariffs would make it harder for overseas companies to ultimately sell their lower-priced steel or aluminum here in the United States, so supporting some of those domestic producers. But it's pretty tough. Maybe some of this could happen on the steel side. Aluminum, though, the U.S. imports, almost all of its aluminum. So it's a little tricky. But anyway, we did see some movement there. BP, I know you guys were, I think, talking about it on air, finishing the day with a gain of about 6.7%, surging the most since 2020. One of the most aggressive activist investors, Elliott Investment Management, building a stake in the company, looking to end years of underperformance by pushing for some significant change. So that was quite a mover. And then going back to Meta, not a huge movement, but it's still up 16 days in a row, as I mentioned, up about 17%. So just kind of interesting to see the trend, the upward trend, big time in that one.
Okay, you got the ones that are moving higher, Carol. I got the ones that are moving lower. Looking at shares of Tesla down for a fourth day in a row, 3% today. Shares down more than 26% from those highs back in December, though still up by about 45% since the election. Last week's Tesla week was the worst week for Tesla since October. It was weighed down with bad sales from around the world. Germany, France, UK, China, and then also some bad news from California as well. On Semiconductor Corp, down 8.2% today. The company gave adjusted earnings per share for the first quarter. The guidance came in much weaker than expected. It wasn't just adjusted EPS, though. It also missed on revenue, adjusted gross margin, and operating expenses. We saw price targets cut at Jefferies and KeyBank in the wake of that report. And finally, shares of Hain Celestial down 10.6% today. It's the company behind Earth's Best, Terra, Garden of Eden. The shares tumbling to the lowest level since 1997. Adjusted earnings per share coming out for the second quarter that missed the average analyst estimate. They cut their guidance for profits and organic sales. They're exploring strategic options for its personal care category. The CEO, Wendy Davidson, said, quote, sales growth in the quarter was hindered by poor in-store performance in snacks, driven by marketing, promotion effectiveness, and supply chain challenges. And they've already taken steps to address those challenges.
All right, the bond market, guys, a little mixed here. We saw some buying across the whole curve, really, but then we got a little distinguished as we went down over the last couple hours. A little bit of selling in the long end, buying in the front end. But the real story, over the next 3 days, we get $125 billion worth of supply. Tomorrow is $58 billion worth of 3 years. So always interested to watch what that takedown is and who's buying and how much they're willing to pay for it.
All right. Good stuff. That's a wrap of the markets on this Monday. Our cross-platform on radio, TV, YouTube, Bloomberg Originals. We call it the closing bell. Guys, we'll see you again, same time, same place tomorrow.
All right, let's turn now to Sarah Frier, our big tech team leader for Bloomberg News, on this developing story, Sarah, which is the Wall Street Journal reporting an Elon Musk-led group is making a $97.4 billion bid for control of OpenAI. Is OpenAI for sale? Does that matter?
It really doesn't matter in this case, and this is an unsolicited bid from Elon Musk. I think what we all need to know here and understand here is that Elon Musk was originally a co-founder of OpenAI, but split with Sam Altman over a dispute about the direction of the future of the company, and has continued to really battle publicly with Altman over OpenAI's future. So this is his way of coming in and saying, I have a different vision here. I'm just going to buy my way in. The amount, though, is pretty cheap for what we understand to be OpenAI's valuation. Bloomberg reported not too long ago that they are raising their latest round at a $300 billion valuation. So this bid, if the board has to consider it at all, is much below what we see OpenAI raising money for.
Kind of a lowball offer, Alex. That was unsolicited.
An unsolicited lowball offer.
Yeah.
All right.
Those don't usually go over very well if you're this seller or the potential seller.
I know, but from at least the reporting from the Journal, Sarah, those with Elon Musk and the consortium of investors, these are real companies, real deal with real money. Can you walk us through what we know on that front?
Well, the most interesting thing about this consortium, which includes folks like Joe Lonsdale and Ari Emanuel, is that OpenAI xAI, which is Elon Musk's OpenAI competitor, would be the vehicle through which he's making the bid. So it's not Elon Musk himself, it's xAI leading the bid along with this consortium of other VCs and investors, which is a unique way to do it considering that that is his newest company. So the idea, according to the journal, would be that they would merge after this acquisition were to occur. Now, another complicating factor is that Sam Altman, who leads OpenAI, is in the process of turning that from a nonprofit into a for-profit company. So the valuation for OpenAI is somewhat of an open question right now, given that we have seen the nonprofit. We know that the nonprofit is engaged in this big AI infrastructure build-out called Stargate. But there are a lot of different entities here, and we're still learning more details about whether this bid occurred and the nature of the financing.
Got it. Okay, so Alex, for Sarah, Alex is sitting next to me.
Yes, it's okay.
Does Elon Musk want OpenAI to be a for-profit or a nonprofit company?
Well, he thinks that true to the spirit of how they started, they should be a nonprofit. But given that it's gone in this for-profit direction, he just wants to make sure that if somebody's going to control, and if I'm not meaning to put words in his mouth, but if I'm Elon Musk and I want to see who's going to control the future of the most powerful technology in the world, you'd probably prefer it to be Elon Musk. So I think that's really what we're talking about here. For-profit and not-for-profit, that's more the stakes of the argument that he's having with Sam Altman. But let's be clear, Elon Musk is totally happy making money off of AI technology in his other companies. He's called Tesla, an AI company. He has his xAI company. So he has no moral opposition to that. He just doesn't like the direction that OpenAI has taken since his departure.
And he also doesn't like Altman as well. Right. That means Sam Altman and Elon Musk don't get along, Alex.
So that's like a twofer on that front. Sarah, typically in the tech space, when you get an unsolicited lowball offer, what then happens?
Well, I think the board will probably say thanks but no thanks. We don't even need to consider this because we think our company is valued at a higher level than this. It's totally different than the unsolicited offer we saw for Twitter, which was $44 billion at a time when Twitter was valued at less than that and declining. So I think this is a very different situation. They won't have to take it as seriously but Musk might continue to push. He might continue to raise the price. When it comes to Elon Musk, in the current era, anything is possible.
All right, Sarah, we really appreciate it. Thanks for jumping on this. Thanks a lot, Sarah Frier, joining us there. So as a reminder to that breaking news, the headline from the Wall Street Journal, that Elon Musk, through xAI and a consortium of investors, are looking to make a bid of about $97.4 billion for control of OpenAI through its latest round of valuation. Bloomberg calculated that OpenAI is actually worth $300 billion. Here with us on the phone is Bloomberg Technology co-host Caroline Hyde. Caroline, what do you make of this news?
I mean, one has to never put down Elon Musk and his ability to catch headlines. His legal work continues to be extraordinarily expensive, I'm sure, and he's a busy guy. I'm just getting live comms as it speaks from OpenAI, and as they're currently stating, they have no comment on the story as it stands. But what's so interesting is to go back to what Bloomberg Intelligence has been reporting. They've been doing great work on basically the legal issues between Musk and OpenAI. Musk has got this feud going with Microsoft and OpenAI, and in particular, they've been going back to court with Elon Musk really trying to block OpenAI's conversion to a for-profit entity. He's got this larger suit against Microsoft and OpenAI and Sam Altman at that as well. But basically, BI has been saying this is likely to be rejected as it's lacking the risk of irreparable harm. They don't think that Musk is going to win this current lawsuit. So who knows whether they're just trying to get an army of really serious investors, as you heard coming from Sarah Frier, Joe Lonsdale, the fact you got Ari Emanuel of Hollywood involved in this. Is this just trying to up the ante? Is this also trying to make the point that at the same time as you've got a Japanese investor, Masayoshi Son, getting closer and closer, wanting to invest more and more, as we understand they're raising up to $40 billion at the moment with a big check coming from him? Is that just some way of trying to put, dare I say it, quote unquote, America first?
Yeah, that's a really good point. I wonder to what extent this unsolicited bid from Elon Musk complicates that effort, that Stargate effort between SoftBank, between Oracle, and between OpenAI.
The problem is that we also know Massa is pretty friendly with Trump. And so Massa has been there alongside the President of the United States, one of the first to come forward and say, I support you since your win. I want to commit more money to the infrastructure of the United States. And indeed, then wanting to get ever closer to Sam Altman and be able to be investing across Japan, too, with OpenAI. It really is just a complex web of big egos, dare I say, big money, dare I say, and it's going to be incredibly complex for the courts to be able to work through this. But as it stands, it is just this $97.4 billion offering to buy the non-profit. Now, of course, this is a company wants to go for profit and is raising money at a far bigger valuation. So what is it exactly that he wants to buy?
All good questions. Caroline, really appreciate your jumping on the phone and giving us some more context here. Bloomberg Technology co-anchor Caroline Hyde. We want to continue our coverage of this story and bring in Greg Valliere. He is Chief U.S. Policy Strategist at AGF Investments. And Greg, you heard the story, the developing story here that Elon Musk is leading a group that has made an unsolicited, there we go, lowball offer for control of OpenAI, $97.4 billion. Do we assume that Donald Trump has been apprised of this and perhaps is on board with this idea?
Probably, not positive, but probably. You have to wonder, when does Musk sleep? Does he get any sleep at all? I mean, you look at what he's been doing over the last few months. It's been just extraordinary. However, I do think we're getting closer to a point where the Democrats on Capitol Hill are thinking this is too much and has to be curbed.
Well, and just speaking of, we're getting latest reporting here that Sam Altman apparently says, quote, no thank you, after the report of Elon Musk's bid for OpenAI through his consortium. So, Greg, to that point, what are different parties, or what's the House or Congress or Senate trying to do to rein in Elon Musk here?
Well, the Democrats that I've talked to, and they've been pretty weak, obviously, for the last couple of months, but the Democrats I've talked to are saying, don't expect us to help you with the debt ceiling, which expires on the 14th of March. I think that they did many times last year. They bailed out House Speaker Johnson with votes. I don't think it's going to happen this time. I think that it's up to Johnson. And I think that the anger on the part of the Democrats is starting to become a real factor.
It's starting to become a real factor. Does that mean that Democrats are comfortable with shutting down the government just so they can stick a needle in Speaker Johnson's eye?
Good question. I don't think they would want to do this for 8 months, but I think a shutdown for a few weeks to show that there is another narrative out there. I don't rule that out at all. And I would say, if we do have a delay on the 14th, and this drags into the spring, I think the big story is going to be on the tax bill. I think the tax bill is going to bog down, and it may be well into the second half before we get anything done on that front.
Just to keep you guys updated on this unfolding feud now between Elon Musk Consortium and Sam Altman. So Sam Altman says no thank you after the report that Musk-led bid for OpenAI. Then he doubles down and says, but we'll buy Twitter for $9.74 billion if you want. So this might be just the gift that keeps on giving from this perspective as they keep throwing shade at each other, it feels. Hey, Greg, when it comes to that tax bill, the tax bill in some ways is needed, right, to offset any impact of of tariffs. So does the sequencing get changed, do you think?
No, I think that there eventually will be in the spring a bill that would extend the $17 trillion tax cut that Trump had in 2017. But I don't think there's going to be any cooperation between the two parties. I think that is wishful thinking. I think the tax bill gets delayed, and I think a budget deal in mid-spring could get really delayed.
Greg, we also know that tomorrow Jay Powell heads to Capitol Hill to begin 2 days of testimony, and a lot of people are calling it a hypercharged environment, a hypercharged backdrop for his comments. Democrats want to press him on a couple of things. Republicans want to press him on a couple of things. What do you think is going to come out of this meeting, this testimony? Because his job right now is to say as little as possible, given that there's so much uncertainty surrounding the tariffs that President Trump has announced so far.
You're absolutely right. It's a fascinating issue. I think that the Trump administration wants to say tariffs will solve all of our problems. I don't think tariffs will solve all of our problems. I think that the chairman will be on thin ice. I think he's got to have a lot of tough questions, and we're starting to see Trump go after the chairman a little more aggressively. I think that's a trend that will continue.
Right, but we did hear Treasury Secretary Scott Bessent talk about the long end of the yield curve, not the short end, which is what the Fed in theory controls. Who's who's the House member or senator that we need to be watching?
I think you would have to look at people like Elizabeth Warren, some of the left-wing members who feel that this has gotten out of control. I think they'll be quite active in the Q&A.
All right, Greg, always appreciate your joining us. Greg Valliere is Chief U.S. Policy Strategist at AGF Investments. And we're going to stick with politics here because top research universities are warning of a potential hit to medical and scientific innovation due to President Trump's funding cuts. Stanford's provost saying, quote, a cut of this magnitude would potentially have deep impacts on medical care, human health, and America's place in the world as the leader of biomedical research. Joining us now with more details is Janet Lorin, Bloomberg's higher education reporter. So this speaks specifically to a type of federal funding from the National Institutes of Health. Has that gone into effect?
Well, it was supposed to go into effect today. We hear there have been legal challenges. So, and really what it means is it's about reimbursements. Universities get billions of dollars for scientific research grants. And it's not just the Stanfords and the Harvards and the Yales of the world. You know, we had heard from Susan Collins today talking about medical centers in Maine that were also impacted by this. And it's a type of reimbursement for what they call indirect costs. So you get a research grant, but you still have to pay for the building. You still have to pay for the laboratory equipment. You still have to pay for the people who are administering the grant. So it's also about jobs as well.
So what is everyone's best guess as to like how this plays out?
It's a good question. We've been wondering about this for the last few weeks with other questions over funding with other federal agency grants. The concern is that these are reimbursements, so that if the schools put their money up front, are they going to get money back? And Stanford had put out a number about $160 million in terms of budget shortfalls. Now, keep in mind these are schools with very large endowments. Harvard has $53 billion, Yale has $41 billion, Stanford has close to $37 billion. So why can't they just spend all that money? And the answer is part of the money is tied up in things donors say it's only going to go for the crew team, so they can't technically use it. It's not fungible to go spend it on other things. And they're tied up in investments. You know, you have money in hedge funds, you have money in private equity, and you can't just take it out like a bank account.
No, I think that's a really important distinction. As much as we talk about this idea that these universities are wealthy, that's money that they can't touch in many ways. So that idea that you mentioned, which is the universities have already spent the money and they're being reimbursed for it from the government, there's not much they can do about that. And we've heard from several universities, Brown, I believe, which have been spending not beyond their means, but they're spending a lot more than what they had anticipated.
Yes, they had some budget shortfalls. And even Harvard, you know, their budget, they're spending over $6 billion, but it was a 9% increase from last year. Spending on fixed items like buildings and upgrading for AI and other things.
All right, and nice dorms as well, as always. Janet Lorin, really appreciate your joining us. Bloomberg News' higher education reporter, Janet Lorin. Coming up on The Close, we're going to bring you the top three, where we focus in on the top three movers and shakers at the center of the day's big stories. This is The Close.
Season is here.
The earnings palooza right here.
They're going to come in hot and heavy.
Bloomberg is first to break the numbers.
Microsoft earnings now crossing the wire.
Lam Research in the semiconductor space. AMD, Alphabet, we've got a lot to digest today.
With the smartest insights.
If the economy's strong, shouldn't that be good for earnings?
Consensus estimates are around 12% growth for the quarter.
Stick with us, a lot more coverage of all those earnings.
Continuing coverage on Bloomberg.
All right, let's get back to that breaking news over the last 45 minutes that has really rocked the street. OpenAI Chief Executive Officer Sam Altman has now rebuffed a reported bid by a group of investors led by Elon Musk's xAI to buy the nonprofit that controls ChatGPT's creator. Now, that unsolicited bid was for $97.4 billion, was submitted to the OpenAI board on Monday. Sam Altman, apparently the company rebuffed it, but then Sam Altman said we'll be happy to buy Twitter for about $9.74 billion.
Yeah, this is the latest chapter in a long-standing feud between the two of them, because the two of them did found OpenAI together, and then Sam Altman became CEO, Elon Musk left, and they don't quite agree on the direction of this company, whether it should be nonprofit, whether it should be for-profit, and now Elon Musk making an unsolicited bid that, by the way, the reporting shows that this is a lowball bid as well, because the latest funding would suggest that OpenAI is worth somewhere in the neighborhood of $300 billion. And he's looking to make a bid of $97.4 billion for control, more than a majority stake, which is quite a different proposition.
Yeah, but I mean, it just keeps on giving in terms of the rebuff. We have to see now what the consortium winds up coming back with. So Altman says no thanks.
All right, we'll continue to keep an eye on these developments. In the meantime, let's get you to our top three, where we name drop some of the people driving the day's most talked about stories. And first up, another member of the Trump administration, Treasury Secretary Scott Bessent. President Trump says he ordered Bessent to stop minting new pennies because they cost more to make than they're actually worth. In 2024, each penny costs about 3.7 cents to make and distribute.
I mean, that seems fair. It's one penny, and it costs almost 4 cents to actually make. Why would we keep making these?
But the penny lasts longer than that one time that you used it.
When is the last time you used a penny?
I don't.
Okay.
Yeah.
Was it
Take a penny, give a penny, at the register?
I mean, you can't even give it as an allowance anymore. Although, if you go through a house and find all of the pennies and you put them into like a bank, I mean, you could get like a couple $100s out of all the coins you have, but still.
And you'll annoy everyone in the bank line
100%
in the process.
Yes. So maybe we do need less pennies. All right, I'm watching Bill O'Reilly, the former Fox News commentator, coming back into the fold. Fox agreeing to buy online producer Red Seat Ventures, whose lineup includes Bill O'Reilly, Megyn Kelly, Dr. Phil, and more.
Terms of the deal were not disclosed, and it's not clear if Bill O'Reilly and Megyn Kelly will be back on the main network, Fox News Channel, or whether they'll just be part of the podcast and video commentary, which is basically why Fox is making this deal. It gets an expanded presence in that space that has been proven to be so influential in the last election.
And those that Red Sea was founded by Chris and Kevin Balfe, if I'm saying that right, they will become part of Fox's Tubi Media Group, and they'll still run that business at the same time.
All right, third on the docket is Lane Johnson. He is the captain of the 2025 Super Bowl champions, Philadelphia Eagles. We know that the Eagles will get their victory parade on Friday, Valentine's Day, but whether and when they will celebrate with President Trump at the White House, that will be put to a team vote. What's interesting here is that Johnson was on the 2018 team that won the Super Bowl, but that Eagles team never made a trip to the White House after Donald Trump called off their visit because multiple players decided that they wouldn't go. And this all came on the heels of a lot of players at the time taking the knee during the national anthem.
Right.
President Trump didn't like that, so there was a bit of a standoff.
Oh, right. I remember all that. Okay, that's so interesting. I didn't know it was also the Eagles.
Yes.
Okay.
It's been a while, but they're back winning the Super Bowl champions again. So it's kind of like Back to the Future.
And you know what? I watched the Super Bowl.
What?
The whole thing.
You?
Yep. I understood it, and I enjoyed it.
But it was a blowout game. It wasn't even one of the very dramatic last second kind of play games.
Good. I could understand what was happening. I was like, oh, that's what those lines are. That's it down. I mean, it's taken my husband many, many years to understand
I'm proud
this.
of you. I'm proud of you for joining us.
I'm ready now.
All right, still to come, from the dominant first half of the Eagles to some rather head-scratching TV ads. We'll recap the highlights. Dreams of a three-peat championship for the Kansas City Chiefs were extinguished pretty early in yesterday's big game. Thanks to a dominant first half, the Philadelphia Eagles secured their second Super Bowl victory, routing the Chiefs 40-22. by halftime, expectations of drama shifted to the performance by Grammy winners Kendrick Lamar, SZA, and a surprise cameo from tennis legend Serena Williams. Joining us now for more on the intersection of pop culture and sports is our U.S. Business of Sports reporter Randall Williams. Randall, still on the ground in New Orleans, recovering from a week of reporting. Randall, it feels like the Kansas City dynasty is over, at least for now, unless the organization does some major retooling during the offseason. This might be an unanswerable question, but I'm going to ask it anyway. How much does the team's global brand as celebrity affiliations, we're talking about Taylor Swift and Travis Kelce, President Trump and, his bromance with Patrick Mahomes and, his family as well. How much does all of that contribute to the team's halo effect, the team's valuation even?
In terms of popularity, it definitely does. People love to root for a winner no matter where you are. And so when the Chiefs went to Germany, they had a big fan base. That Dolphins game, if you listen to the broadcast a couple of years ago, Rich Eisen, who's from NFL Network, said this feels like a home game. In terms of valuation, that's all based in the real estate that's around the stadium, the ways the billionaires invest in their teams. So you can win 10 Super Bowls, but if you're not investing around in the city that you're based in, it's not going to help your valuation.
Very important point, but definitely it adds to the brand awareness. The game itself, Randall, felt less exciting than some of the people who were attending the game. I mean, we mentioned Kendrick Lamar, we mentioned Taylor Swift, President Trump, Serena Williams. I know that you were busy the whole week meeting up with sources and folks in the industry. Talk about the networking that was taking place during a game in which each play was not so crucial to the end result.
Yeah, there's a lot of meetings that happen at the Super Bowl. I mean, you saw Donald Trump or President Trump attend the game. There's a lot of meetings that happen throughout the week. And so I think that this is probably the biggest sports networking event of the year. There's a lot that happened, whether you call it All-Star Weekend or WNBA All-Star or even MLS All-Star. All of these things are corporate sponsored heaven. So that's what the Super Bowl is. And I'm sure that there will be deals that, will work on during this week that'll eventually come to light.
Speaking of corporate sponsorship heaven, you were at the Super Bowl last year in Las Vegas. You attended this year's Super Bowl in New Orleans. Compare and contrast the corporate presence there, because I know it's just gotten bigger and bigger every year.
Well, Las Vegas definitely had a bigger presence. I think it was their first one. And so everyone was excited to be there. Even if you look at the celebrities who attended the game, I mean, they had a lot of them there. And yesterday, it was President Trump and Taylor Swift, and outside of that, they didn't really show us too many more within the stadium. But in Vegas, I mean, LeBron was there, and I think Taylor Swift was sitting alongside rapper Ice Spice, and so the popularity between the two, I think people have seen New Orleans Super Bowls before, and the shining lights of Vegas shine brighter than just about anywhere.
Yeah, it's a good point. I want to also bring in the idea of DEI. I know that it didn't really get discussed in any real form, but there's such a contrast between President Trump and what he's doing in Washington, dismantling all the DEI infrastructure, and what the NFL has made really clear. Roger Goodell has said it's been good for us, and we're going to continue doing what we've been doing. And you kind of saw that visualized on the in the end zone with the messaging. Usually, for the past couple of seasons, it said "end racism," but this year they changed it to "choose love," and you also saw that on some of the players' helmets as well.
Yeah, they changed the phrase, and they said there was no correlation between President Trump's arrival and the Rooney Rule and things that they were putting at the phrases they were putting at the end zones. I think it's up to the person to decide if you believe that. I've spoken with a number of people within the league office, and they're doubling down on the Rooney Rule, on several diversity initiatives, and even from the ownership suite level. The next time that or any time that a new ownership group buys a team, they are given almost like a little bit of an advantage when you have a person of color or women. So you think of the Broncos with Mellody Hobson, you think of the Commanders with Magic Johnson. The NFL has come a long way in terms of diversity, equity, and inclusion. Now, could you argue that they have a long way to go, especially in light of the Kaepernick situation that happened a decade ago? Absolutely. Everybody has work to do, and they know that too. But they're doubling down and not necessarily picking a battle with President Trump.
Right. And of course, they have the viewership to back that all up as well. Bloomberg's Randall Williams, thank you so much, and congratulations on a week's worth of reporting. Really appreciate it, and look forward to seeing you back at home. As we've been noting, the NFL's growing popularity, both in the United States and abroad, has executives mulling over expanding the season to 18 games from the current 17. Of course, not everyone is on board. I spoke to NFL Players Association head Lloyd Howell Jr. last week, and he says a lot more research is needed.
The science has to support the health and welfare of the players instead of just adding more games for financial reasons. It's not just the length of the season. It's also, well, how many games would be overseas and how far away? What's the recovery time? What's the structure of the league look like? And then ultimately, what are the finances that would benefit our membership?
And it's not just the players or the NFL itself wondering how they might capitalize off of an 18-game-long season. Brands, networks, and advertisers, they're all wondering the same thing, too. Joining us now for more on this is Mark Douglas. Mark is CEO and founder of Mountain, which helps build advertising software for brands. Mark, what would an 18-game NFL regular season mean for the advertising industry and how the advertising economy, what it looks like right now?
Well, the advertising content, the shows that brands most want is sport. Because it's the place where you can get a big audience at one time. Even an average Sunday game gets a bigger audience than just about anything else. So I think brands love it. They're looking for as much sports as they can get.
They're looking for as much sports as they can get, and the NFL is trying to deliver that for them. But in doing so, it's putting on games Thursday, Friday, Saturday, Sunday, Monday, and, well, maybe not Saturday because we know that that doesn't happen. But in the process, really making it difficult for the players as well. But this is something that the brands are okay with, is it? Or would they prefer being on the Sunday game and the Monday game as opposed to the Thursday game?
I don't think the brands matter. I think Amazon is doing quite well. They have the Thursday Night Football. You don't see brands avoiding that. If anything, I hear that that's some of the biggest revenue per game of any of the games out there. So I think brands just want sports anywhere, anytime, any day of the week. And there's a little bit of a rational. I think there's a lot of personal motivation in there also. Like they just want they just want to see themselves on the NFL play some role, but that's not the best way to make an investment decision, in advertising. But there's an insatiable demand for it.
Yeah, there's a little bit of FOMO when it comes to the brands and the Super Bowl, and we're looking at a couple of clips from the advertisements that did air yesterday. The current one here is a Tubi ad, which confused a lot of people. Also, Mark, Tubi is owned by Fox, so was this a paid commercial or was this a network promo?
It was a paid commercial. I have a little bit of information on that. So even if Fox, an investor in you, owns you, they're charging ad rates for that because so somehow, some way, it's getting paid for. I know some other brands that Fox has an affiliation with, and I definitely know they paid to be on the Super Bowl.
It surprised me how often we saw Fox promos during the Super Bowl, and I only ask because it seemed like for every paid advertisement there was something about the Masked Singer or another reality show that Fox is airing. Is that, am I wrong in thinking that there was more than usual in terms of promos?
I mean, I think all the networks kind of do that when I say all, I mean the CBS's, NBC, Fox, who get games like the Super Bowl. I don't think it was higher than normal. I think it's just for the network to promote. You don't see it too much anymore in streaming, but there used to be lead-ins to a show premiering right after the Super Bowl. That used to be a big thing before streaming. So I think it's a pretty normal thing, and Fox played the game well.
Okay, what was your takeaway from the commercials that we did see, Mark? There seemed to be a dearth of actually interesting commercials. A lot of them kind of were like,
Yeah. Well, I don't think there was a lot of humor in the Super Bowl. That's the biggest. I think there was some attempts at it, but I don't know if all comedic writers went on strike before these commercials were created, but they were not funny. And that was the hardest thing. They couldn't. I didn't laugh. I thought it was kind of revenge of the emerging brands like Poppy, which had, I think, 5 big TikTok influencers on, I think was a great ad. I actually bought the soda right after the ad to try. Fetch did well, giving away a lot of money. GoDaddy, the Hims and Hers was a little controversial, but did well. So the brands that sold their product rather than the brand, they told you why you should buy it. I think they did really well. And the brands who decided to just try humor to make the, the kind of create a halo around the effect, I think everyone just stared at the screen and was, what's the joke? I don't get it.
Yeah, they were trying a little too hard to be memes, like this tongue commercial from Cool Whip or some whipped cream. It just confused me. All right, Mark Douglas, really appreciate your joining us. Mark Douglas is CEO of Mountain, which helps build advertising software for brands. Let's give you a recap of what happened in markets today. We did have an up day here for equities, and in fact, it was big tech leading the way as well, with Meta closing higher for a 16th straight day. Green arrows all around, including for gold prices, which climbed to a record high, gaining 1.6%, kind of taking aim at $3,000. And it's notable as well that the ETF that tracks steel companies higher by 3.8% as President Trump announced plans to impose 25% tariffs on steel and aluminum. Not much movement in the Treasury market, but the two-year yield does inch lower by 1 basis point to 4.27% before Jay Powell begins 2 days of testimony on Capitol Hill. This is the close on Bloomberg. Just 4 more days until Valentine's Day, and in honor of the holiday, Baked by Melissa is highlighting the idea that opposites attract. The brand has teamed up with Tabasco and Cabot Creamery to curate an assortment of cupcakes that highlight the unique flavor pairings. Joining us now to discuss is Melissa Ben-Ishay, the CEO and founder of Baked by Melissa. Great to see you here. Thanks for joining us.
Thanks for having me.
So tell us how Tabasco and cupcakes go together.
Well, I love bringing flavor pairings together that are maybe unexpected duos, especially for Valentine's Day. And what better than spicy and sweet, just like a lot of people, like I'm the sweet one, my husband is the spicy one. So for Valentine's Day, we thought it would be fun to collaborate with Tabasco and Cabot to bring some unexpected duos and bring flavors together that you would never expect work so well.
These are limited offerings, though. It's not something you're going to introduce to the permanent collection?
Correct. They are available only right now for Valentine's Day. You could go to bakedbymelissa.com, get them, ship them anywhere in the country, order for pickup or delivery in the New York area, and make your Valentine's very happy.
I'm glad you mentioned the different platforms that you can get the cupcakes at. Can you tell us a little bit about how you're thinking about distribution, whether it's bakedbymelissa.com versus the brick and mortar store in places like New York City versus other third-party sellers?
Sure. So we see bakedbymelissa.com as our flagship store. You could go there to get your own cupcakes shipped to you or pick them up, or like that is our core business. And we are still shipping for Valentine's Day. So if you're listening right now, take care of everyone you love. And then we also sell our cupcakes on Fresh Direct and in some other places, but mostly our stores and on our website.
Okay, and you're kind of counting on people stopping by and being just so wowed by the flavors available that they're going to pick up not just 1 box, but maybe 2 boxes or 3 boxes as well. That impulsive purchase. One thing that we should mention is that you are a TikTok star. You show up every day. You've got new content coming out every day, and the thing that's interesting, of course, is that it's not just about dessert or cupcakes. It's much bigger than that.
It is. I actually am an accidental TikTok star. I went onto TikTok as a way to learn how to use the app so I could give my team actionable feedback in 2020 during COVID. And in order to learn it, I started recording myself making dinner or dessert for my family because I do that every day too. And the videos just started taking off, and I recognized every opportunity and create some myself. So I knew it was something that I couldn't pass up, and I kept posting recipes. So I post a new recipe every single day on TikTok and on Instagram. And then there's also behind the scenes footage of me at Baked by Melissa in the bakery, making the cupcakes.
We love behind the scenes footage.
Yeah, it's such an awesome tool to share who I am, who Baked by Melissa is as a brand, what we stand for, and what we do every day.
So does that mean that you're going to bring some of what you've done on social media, on TikTok, to the Baked by Melissa brand? I mean, could you expand beyond cupcakes and bring in some of the goods that you make at home for your audience?
Anything is possible. So I do have a New York Times best-selling cookbook called Come Hungry, and it has so many of the recipes that I make on social media, and there may be more to come in the future. And I also share, I have a Substack, and I share my recipes with that community as well.
So available on different platforms. I got to ask you about the cost of ingredients, because we know that a dozen eggs is now really expensive. Cocoa prices have been going up and up over the last couple of years. You think about Valentine's Day and how expensive chocolate has become. How are you coping with that? How, are you buying the ingredients in advance to the extent that you can? Are you hedging any of these costs?
We do everything that we can, and we're constantly paying very close attention to our margins. We have adjusted pricing over the years. We've been in business for over 16 years, and the quality of our product is my top priority. We make them small so you could try them all. You could ship them anywhere in the United States, and they arrive perfectly fresh and safe. And so for now, we have a very close eye on our cost of goods.
After Valentine's Day, when is the next big holiday? What's the next big event for Baked by Melissa?
After Valentine's, well, I personally am very excited for International Women's Month, Women's History Month. And then after that, we have Mother's Day, which is a really big holiday for us at Baked by Melissa.
And how early do you start planning the menu?
We're planning. We're planned out.
You're planning for Christmas at this point.
We're planned out through the summer right now, but we have so many moments throughout the year. We celebrate birthdays. It is our single biggest holiday throughout the year. We do a ton of birthdays all year round. We have Easter. We have St. Patty's Day cupcakes. You name it. And it's just so fun to be that bright light in people's lives during good times and bad and stressful times, and in a time when you kind of can't believe reality a lot of the time.
Yeah, but we can all find comfort in a cupcake that brings you back to your childhood.
Exactly.
Melissa, thank you so much for joining us today.
Thanks
really
for
appreciate
having
it.
me.
Melissa Ben-Ishay is CEO and founder of Baked by Melissa. Now, still ahead on the close, what investors need to watch for over the next 24 hours, and the latest, once again, on an Elon Musk-led group making an unsolicited bid for OpenAI. This is Bloomberg. Let's return now to the trending news story regarding Elon Musk and OpenAI. Just a reminder here, a Musk-led group of investors, according to the Wall Street Journal, put in a bid to buy the platform for $97 billion. They submitted this bid to the board of OpenAI. Sam Altman has said no thank you. Joining us now with more on this is Bloomberg Intelligence senior tech analyst Mandeep Singh. Mandeep, what was your initial take on this? How seriously do you take this offer?
I mean, look, Elon Musk has a foundational model company. So xAI is a company that is a competitor to OpenAI and, Meta and Gemini, so all these foundational models. And what DeepSeek moment has showed us is everyone is focused on, reasoning models, which is what OpenAI Owen is. And everyone is fixated on, lowering the cost. So our view is there will be more consolidation, but I didn't anticipate this form of consolidation where you end up seeing a hostile bid, where clearly, I think, given Microsoft's stake in OpenAI, there's no way you could see a deal like this happening.
Okay, so that's an important point here, because Microsoft owns 49% of OpenAI. They're basically the controlling shareholder. They've not said anything about this at all in response to this unsolicited offer. Sam Altman did say, no, thank you, but we will buy Twitter for $9.74 billion if you want, so kind of trolling him back. If Microsoft were to say something, what would it say here?
Well, I think the relationship between Altman and Microsoft hasn't been very good either. And there have been concerns about OpenAI triggering an AGI clause, and that would potentially be an end to, the profits that OpenAI has to give to Microsoft. So there are a lot of legal complications when it comes to the OpenAI-Microsoft relationship. But the fact is, Microsoft does have a 49% stake in the company. Even though they don't have a board seat, they still will call the shots. So they haven't said anything on Twitter, but I would be very surprised if they were even open to entertaining,
And they're all in on OpenAI. I mean, this is it. This is their bet on AI. What do you make of the investors that Elon Musk has gathered here to make this bid? Valliere Equity Partners, Baron Capital, Atreides Management, Vi Capital, 8VC, Ari Emanuel, Palantir co-founder Joe Lonsdale. This is a serious group of investors.
And a lot of these are investors in XAI. So that's the common thread. Elon wants XAI to be the foundational model that everyone uses for AGI or deploying generative AI. So from that perspective, it makes sense that they really want to double down and kind of make that connection with OpenAI in some way. But I still don't see a way where this form of deal would go through.
And XAI, just to be clear, is a lot smaller than OpenAI as well. So we're talking about a minnow buying a shark.
Well, I mean, XAI did have their own private funding round, and they raised $6 billion, I think, recently. So clearly, with foundational models, the race is narrowing. Now you're talking about 5 or 6 foundational model companies: Anthropic, Meta, Gemini, XAI, OpenAI. So, and then the Chinese one. So clearly that race is narrowing, but you need a lot of capital to keep training your models. And if you're not going to see, DeepSeek or that sort of moment where you have the adoption and the kind of the consumers using your product, then it becomes hard to sustain, the billion-dollar investments when it comes to training these models.
Very quickly, is this good news or bad news for Meta?
Well, I think the good thing for Meta and Google is they own their own destiny when it comes to the CapEx and also their own applications where they deploy these.
All right, good stuff. Mandeep Singh, really appreciate it. Mandeep Singh of Bloomberg Intelligence. And just a quick glimpse into what we're watching over the next 24 hours. More earnings, Marriott, Shopify, AutoNation before the market open. After the market closes, Zillow, DoorDash, and Lyft. We also get the NFIB Small Business Index at 6 a.m. And at 10 a.m., Fed Chair Jay Powell starts his testimony on the Fed's semi-annual monetary policy report. That does it for us. Balance of Power is up next.